Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Equifax is out with its first earnings report since revealing its massive hack. Aditi Roy has those numbers. Aditi?
Hi there, Kelly. It's a split decision. Revenues on the top line, it is a miss there. Revenues coming in at $835 million compared to $846 million. But it was a beat on the bottom line. EPS is $1.53 versus $1.49. But obviously the big news is the breach and the impact of that breach. And the company's interim CEO, Paulino Barros, in those results saying that our teams have taken immediate actions to improve our data security and provide improved support for customers who were impacted by the security incident. As I look to the future, they've committed Equifax to 4 things: protecting consumers, enhancing security, empowering consumers to control access, and leading the industry to confront the massive economic and national security threats represented by cyber criminals. We should add that in the 10Q, the company did have a separate section on the cybersecurity incident, and it said it expects to incur significant losses related to the breach, especially in terms of the legal costs and everything. And I'm also reading right now, Dow Jones, this is just a headline, is reporting that Equifax has received subpoenas regarding trading activities by certain employees in relation to the cybersecurity incident. Obviously, the company has been looking into the sale of shares by 4 executives. The company says that those executives had no knowledge of the breach when they sold those shares, but that's obviously been a bone of contention among lawmakers. The company said they have done their internal investigation and have found no wrongdoing, but obviously this is an ongoing story, as this headline reads that the company has received subpoenas regarding trading activities by certain employees in relation to this incident, and we'll continue to keep you posted and dig deeper into the earnings release. Back to you guys.
Aditi, thank you. Mike, Equifax shares down a little less than 1% right now. Not a ton of movement.
Not a ton of movement, not a ton of attention, I think, on the quarter. Obviously, it's more about just longer term, what is this going to cost? And I don't think anybody can really fix the range of potential liability at this point.
And now they're down about 1.5%, but still, we take your point. Let's send it back to Julia Boorstin with some news on ESPN. Julia?
That's right. A source tells us that ESPN is planning to lay off more than 100 staffers after the Thanksgiving holidays. This was first reported by Sports Illustrated. It's our understanding that these layoffs will be across various parts of the company. And of course, this is not the first round of layoffs we've seen at ESPN. There were some earlier this fall and again in the spring. And this all comes as ESPN is preparing to launch its direct-to-consumer app next year. There seems to be a real overhaul of the company as it looks to focus more on going digital and also now going direct to consumer. And it's my understanding that ESPN is still continuing to hire in some areas, even as they do these layoffs. Back over to you.
Interesting. Julia, thank you. Mike, this is a significant number. There have been some rumors that more layoffs were coming, but I think to see another 100 go is more than people were expecting.
Sure. No, I think it's obviously sort of an ongoing process to sort of resize the whole business and shift it in stages away from, the cable toward the digital and all the rest of it. So I don't think it's a surprise. Within the scheme of Disney, 100 is not a big number, but clearly it doesn't seem like they're at the end of a process of restructuring.
Yeah, ESPN staffers, of course, already on edge. Let's bring in Robert Luna from Shervest Wealth Management. He's a Disney shareholder, and Chris Johnson from Johnson Research Group. Thanks, guys. Robert, what do you make of these layoffs, first of all?
Well, yeah, I think Mike was just saying it's probably to be expected, because even if it's not just ESPN in general, the basic background that you need going into digital is different than some of the people that they're laying off right now. So, while 100 is not a big number in terms of Disney, it's still probably a little bit more than most people were expecting. So, it is news.
What do you think of the quarter, broadly speaking, Robert, with a miss on the top and bottom line, the likes of which we don't often see from Disney?
Yeah, well, it's never comfortable coming on being the bullish guy on Disney after a quarter like that. It wasn't good, but, Kelly, I think you brought up a really good point a little while ago about studios, and I don't think it's getting enough credit. And the whole knock has always been it's lumpy, you really can't count on it. But, that was before Marvel, that was before Lucas, and now what we're seeing is a consistency coming from studios that I don't think is being priced in. It's only 1/3 of the revenue that Media Networks is, a half of Parks and Resorts. So I think there's a lot of room to go there. And when you look at Parks and Resorts, Disney's made tremendous investments in Shanghai. They're going to be doubling their fleet in the cruise line ships. There's a lot that's going to be coming online in Parks and Resorts as well. So while they're making this transition to digital, I don't think you can give up on the stock right here. I mean, these numbers are to be expected out of media.
Chris?
I hate to say it, but I agree. One of the things, let's go back to one of the things Stephanie said about Nordstrom right now, and that is that large companies like this take some time to turn around. When you look at Disney, ESPN, they're trying to go over the top with the boxes right now in the set-top boxes. That is going to take some time, but I think they're focused on that transition. They've got their deal that's going to run out with Netflix. They are clearly making the moves right now to go to digital and own it themselves. Are there going to be some pieces that they buy from Fox along the way? Perhaps. I think that's going to make that stronger. On the background, you've also got the parks and recreations and other areas of the business that I think are going to serve as a foundation right now. Disney has turned into a low expectation and an improving technical picture trade for us. When you look at it, short interest went up ahead of this earnings announcement, so people were lowering the bar on Disney. The other thing that's real interesting, when you look at the media group, the average analyst recommendation right now is a 72% buy. Right now, Disney's at 58%. So the bar has been dramatically lowered for Disney. It's breaking back above $100. I've seen, we've almost come back. We're at $99.50 right now in after hours. Closes above 100. I think this is one where the long-term investors are going to see it as a value.
Mike, I was going to go back to the point Robert was making about the studios, and if we're starting to now look at Disney as a streaming media company, do those studios become more important? Not, I mean, yes, you always want to see them kind of continue to get the hits, and they're demanding more of the box office revenue when they do, but is it just about the recognition that, hey, they've got a great asset here, when it's offered over the top, it's going to be compelling?
Well, the library plus the studio capability and also the TV production, right? Keep in mind, ABC TV Group and, of course, they're now rumored to want the Fox one. They are the factories of streaming media. That being said, and I agree with everything that these guys are saying about maybe unrecognized long-term value in studio, but everything that's being said was also true when the stock was trading at 90. I mean, it's just a matter of how the market's going to look at this. And as steady as you want to say studios are, nothing is as steady as ESPN in its heyday was. And that's what the market has had this long-term adjustment to. They felt like it was way too sturdy a business at one point, and now they've kind of overemphasizing the rest.
CBS. CBS comes out in its earnings and says, we're offering our content over the top, and we're not hurt by cord cutting. And if Disney's able to kind of start getting into that mode, too, does that allay a lot of the concerns?
Well, it could. The thing with CBS is if you look at their assets, the thing they're not exposed to is basic cable that they've had pricing power on, and now they're losing it. Okay, they're in broadcast networks, Showtime premium cable, and a few other things. So it's not as if they're in the same areas that are most susceptible to cord cutting. Plus, they have this tailwind of charging everybody for the broadcast network. So CBS has been in this pretty good spot when it comes to the predominant worries about cord cutting.
Robert, just want you to weigh in on the deal, the possible deal for Disney to buy the assets from Fox. Is there a price at which you wouldn't be comfortable with that? How do you feel about that strategy in general, and should they be doubling down and maybe doing more of that?
Well, it's difficult to tell, I mean, in terms of price, and there's been some different rumors, in general about the Fox acquisition, but also which pieces would they buy? I think the most valuable are things that they already have a footprint with, like Hulu, like X-Men, like Avatar, where they either have ownership in or they've implemented into the rest of their brand strategy. So I think for them to make that acquisition in terms of getting ready for this over-the-top direct-to-consumer solution, I think there's a lot of properties that they'll be able to immediately monetize. So for me, it was a match that made a lot of sense. Obviously, price is going to be a condition, and there could be some other issues in terms of the government stepping in to put a chokehold around that. But I think in general, it's a good idea.
All right, gentlemen, thank you. Robert Luna and Chris Johnson joining us to talk Disney, which is down about 3.5% still after hours. Now, NVIDIA's earnings are out. Let's get over to Josh Lipton for that report. Joshua?
Kelly, NVIDIA reporting earnings per share here of $1.33. That's versus expectations of 94 cents. Revenue up 32% to $2.64 billion versus an expectation of $2.36 billion. So beats there on the bottom and the top. And Kelly, Q4 revenue guide here of about $2.65 billion. Analysts have been looking for $2.44 billion. And just looking through the divisions, Kelly, gaming at $1.56 billion, data center at $501 million. Of course, this stock heading into this print is already up more than 90% year to date. Investors on the call are going to want more color about that data center business, gaming sales, mining for crypto. Call starts at 5 p.m. Eastern, and we'll be on it. Kelly, back to you.
Thank you, Josh. Mike, NVIDIA shares are up just about 0.5% right now.
Yeah, they're recouping. I mean, yes, they're up tremendously year to date, but they actually are down a little bit, several percent, as a matter of fact. from recent highs. So it seems as if maybe we're just going to snug up and see if that was overdone or not. But this is a pretty diffident reaction so far to these numbers.
Good word. The stock, by the way, along with AMD, there were some big decliners in the session today. NVIDIA was down 2%. It's now turned lower. We'll keep an eye on it. We have more on that coming up. But Redfin's earnings are out. I think its first report as a public company. Morgan, how'd they do?
Yeah, so it was a mixed bag for Redfin, which is the tech-based residential real estate brokerage company. Earnings per share, 12 cents adjusted. That was a penny beat. But revenue of $109.5 million, falling short of estimates of $110.6 million. It looks like it's also a mixed forecast for the current quarter in terms of guidance as well. Revenue for the current quarter seems to be better than expectations, but the bottom line guidance for Q4 appears to be weaker than anticipated. Nonetheless, Redfin CEO Glenn Kelman saying that the brokerage market share gains did accelerate. Kelman saying that the brokerage market share gains did accelerate last quarter. Strong traffic growth and steadily increasing sales in all of our new businesses, he said in this report. However, if you take a look at these shares, they are down 6% in after hours right now. We'll stay tuned and hear what they have to say on the call, which is starting right now. Back over to you.
Thank you, Morgan. Mike, a little surprising given how well Zillow did on its result the other day.
Obviously at a different stage of their growth, and the stock's not traded well since the IPO at all. I mean, it's not a disaster, but it's definitely been pressured. So it seems as if a little bit of a show-me story, at least, because obviously the first report, the street kind of doesn't know the basis of how it's being presented.
Well, look, even at Roku, I mean, had a strong first day. It sold off, and now it was up more than 50% today. Anyway, there is Redfin down 6% after hours. Let's get to our news update at this time with Contessa Brewer. Hi, Contessa.
Hi there, Kelly. Here's what's happening right now. 5 law enforcement officers awarded the U.S. Capitol Police's highest honor for their bravery during the June attack on a congressional baseball practice. Congressional leaders were on hand, including Congressman Steve Scalise, who, of course, was gravely wounded.
These 5 brave men and women prevented what would have been mass execution. A lot of members of Congress that are here today wouldn't be here today. I wouldn't be here today without the heroism and their bravery.
Amazon will start selling Kindles, Fire tablets, and other Amazon devices at its Whole Foods grocery stores. That move gives Amazon another place where shoppers can touch or try out its gadgets during the holiday shopping season. Starting tomorrow, you really can have breakfast at Tiffany's. The company will open the Blue Box Cafe at its New York City flagship store. The cafe will serve American classics, and the menu will change and evolve through the seasons, we're told. And you can go there and have breakfast for, a measly $29. That's nothing at Tiffany's. Nothing.
They should have done this ages ago.
Right.
Contessa, thank you very much. Contessa Brewer. Let's take a look at how we finished on Wall Street today. We had a big sell-off middle of the day, but we made up some ground. The Dow closed down 101 points, was down 250 at the lows. S&P down just under 10 points. NASDAQ down 39. The Russell down about 7. Transports were hit hard today, too. Checking on the names moving after hours on their earnings. Disney, for starters, still lower by about 3.5%. Nordstrom down 2.5% now, and Hertz Global is up nearly 13%, lifting Ava shares too. Let's get to some of the other big stories today in our rapid recap. Finally out, and it falls short of some of President Trump's plans in terms of details and where the bill goes from here. Here's Elon Moy. Elon?
Kelly, there were big steps in both the House and the Senate today on tax reform. The Senate, as you mentioned, unveiling its tax plan while the House voted its bill out of committee. But there are big differences between the two versions. One of them is that the Senate delays the introduction of the lower corporate rate by 1 year. The House version of the bill puts that 20% rate to start immediately. And Ways and Means Committee Chairman Kevin Brady told me that that's going to be one of his priorities going forward.
Well, you can tell in this bill, we think growth ought to start as soon as possible. So we enact pro-growth tax reform immediately.
The Senate version of the bill also includes 7 individual tax brackets with the top rate at 38.5%. The House version of the bill, 4 tax brackets. The top rate is 39.5%. 9.6%. They also treat deductions very differently. The Senate version of the bill completely repeals the state and local tax deduction. The House version repeals the income tax deduction but limits the property tax deduction. So these are just a few of the differences that are going to be need to be ironed out between the two chambers in the coming weeks. Meanwhile, Treasury Secretary Steven Mnuchin saying that he still expects lawmakers to meet a Christmas deadline.
I very much appreciate the opportunity to work with you all year. It's a great day and moving in the right direction for middle-income tax cuts and making our businesses competitive. And I'd also just like to acknowledge the progress that the House made as well today. We look forward to getting this to the President and get signed in December.
So these are the opening salvos in those very long negotiation, guys. A lot of work still to be done. But for today, Republicans taking a victory lap. Back over to you.
All right, Elon, thank you very much, Elon Moy. Here's with NVIDIA down about 0.5% after reporting its earnings just a few moments ago. Joining us now is Ivan Feinseth. He's a director of research at Tigris Financial Partners. And I love how, for once, the stock isn't a huge mover because normally it's been seeing huge swings and it's a massive performer year to date. But then it sold off more recently. So what do you see in this quarter?
It was an incredible quarter. Revenue up 32%, net income up 60%. They are increasing processing speed and driving down processing cost in every key area of technology.
What about Intel and AMD joining together?
Well, I mean, nobody can keep up with NVIDIA. That's the problem. They really have no competition.
No competition. On the other hand, I wonder if people have already kind of gotten to a point where it can really has no margin for error in terms of the stock, in particular with some of the unstable sources of demand end markets, whether it be cryptocurrencies or some of the gaming applications.
Well, but the key drivers, the key areas of application are virtual workstations, data rooms, immersive virtual reality, artificial intelligence, data processing, and now their new Drive XP computer is being tested by probably every auto manufacturer. So, yes, the stock is priced for perfection. But
I just think it would surprise people to know it's got a $123 billion market cap. Right?
Wow.
Yes.
Kind of amazing.
Wow. That's huge. It makes it one of the biggest companies in the world.
Yes, but you get few companies that come along with game and industry-changing technology. And the whole trend of moving processing power away from the CPU, they've actually ridden the forefront of moving processing power away from the CPU and onto the GPU.
They were at the forefront, but can they protect that moat? I mean, is difficult sometimes. I mean, sure, they got there first and they're kind of the standard setter, but everyone else now gets this and is rushing to catch up, right?
Everybody's trying to catch up, but they haven't come near catching them yet.
Why do you think that is?
I think just the design of their technology, their huge installed user base. Now every server manufacturer is partnering with them. Dell, HP, IBM have all announced new data servers that are using their GPUs. So their customer base and their end user base continues to grow. They have one of the leading autonomous vehicle computers that everybody's testing and using. They are first to market with that. They've been first to market with so many things that everybody who's trying to catch up is not able to catch up.
Geez, I practically see them blushing to hear you talk this way. Ivan, thank you very much. Talking NVIDIA there, which is a little unchanged after it did report that revenue beat. Disney and Nordstrom have their conference calls underway. We're going to get a check of those stocks and what to expect in tomorrow's trade right after this.